Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. The equity markets are melting higher right now. The S&P is out above 2670. Another anecdote on trade following yesterday's. You got it from China this time, saying they're willing to come to the table, work to eliminate the trade balance. They're going to pick up imports by $1 trillion over the next 6 years. So there's no news denying it. It's providing a better tailwind to the market that was already there. So right now we're out above resistance in the S&P. 2652, 2656 was an area that we had. Now we are looking at some resistance out above, but this really pins the major level out right above 2700. A huge trend line up there, as well as a big retracement. And you're getting the short squeeze. You're getting portfolio managers with FOMO right now that either trimmed at the end of last year. They're not riding this wave already. So again, a lot of FOMO going on and short squeezing. But right now, that could really be what pushes this thing higher. You're heading into a holiday week, Monday's holiday session. And sometimes tops and bottoms do come during holidays. So watch out for this market. If it does melt up a bit through into Monday, Tuesday, we could see a pinnacle coming next week as we look into the U.S. and China trade talks the following week and a non-farm payroll number. So a lot coming down the pipeline over the next 2 weeks that's going to be critical for this market. But right now, it's tough to fight this sort of path. Moving on to crude oil, it's following the equities higher. It likes the news on trade. It's hit 54 bucks in crude. But a lot of resistance up here. Watch, again, a close at our first key resistance level, lining with about 53.5. See where this market finishes the day. You got some news from IEA. Not so upbeat on overall on the path for crude demand as well as the supply over this 2019. So that didn't really hurt sentiment on crude. It's been healthy given the broader market. But that's something that can sink in if we don't get any sort of drawdown in inventories. But for now, OPEC's news that they cut production in December, and the sentiment coming with U.S. and China trade is a tailwind for crude oil into the weekend. Tough one to fight as well. But look at gold. It is pulling back, and we remain bullish gold. We've been welcoming this lower price action. We've said capitalizing the strength through this week or last week as well. Now we're starting to see a pullback here. First key support. Be patient. Now we have another level of support down below there, and then we have major 3-star support, 1260, 1265 area. It's going to be crucial. That's where you want to be willing to see the market come into and be ready, willing, and able to buy at that level. It may not get there. You may want to step in before that. In fact, we are with clients, but you want to be ready, willing, and able to buy again at 2660, 1260, 1265 area if gold can get there. And then moving down as well is the treasury prices. 10-year treasury 121, in the 30-year getting closer to 144. These are big areas of support that we've been waiting for. We like buying into that, but be patient here with the equity market doing what it's doing. The 10-year yield, it's hitting 2.8. This is going to be a crucial level. It's when we broke down through, it started to cascade lower. So a lot of resistance here at 280 in the 10-year yield, aligning with 121. And the prices. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can call us again, 312-278-0500, or you can email us info@bluelinefutures.com and check our website for updates. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.